Hello, and I am delighted to be joined today by Daniel Bell of Bell Financial Solutions, award-winning independent whole-of-market mortgage advisor. Bell Financial Solutions is Daniel's fabulous company, and we have worked with them for the last few years for our clients, and they have done a pretty sterling job. So Daniel is here today to give us some updates and talk about mortgages post-divorce. So welcome, Daniel. How are you doing?
Very well. Thank you for inviting me on.
That's my pleasure. Liking your background. For those of you who are listening, it's got some lovely palm trees, a very nice looking background there. I'm feeling like I'd quite like to be amongst some palm trees today. Indeed, on this Monday morning that we're recording this. So we're gonna start a bit with the basics, aren't we, today? So mortgages. Why am I not going to go to my local branch of my bank? Why am I going to come to an independent financial mortgage advisor?
So going to your bank, building society is great. They obviously know quite a bit about you, and obviously people feel that they've got a loyalty to their bank and building society. However, your bank or your building society that you have banked with, they can only offer their own products, and they can only go with their own criteria. And although that you may have banked with them for 5, 10, 15, 25 years, they still have to stick to the book. Whereas, your situation post-divorce can be quite complex. And it can be quite disheartening going to your bank, thinking that you've got this great relationship with them, and they turn around and say, computer says no. And that can happen. And then you think that you're unmortgageable, and that's certainly not the case. A mortgage broker such as myself, whole of market, there's about 150 different mortgage lenders at the moment. Just because your bank says no doesn't mean another bank's going to say no. There's lots and lots of different lenders out there that have all got different types of criteria, different appetites of risk. And just because your bank isn't able to lend on that situation doesn't mean another bank will not lend on that situation. Someone like myself can think outside of the box, and we also know what lenders do and don't accept. And that's where, we really come into our own with our knowledge and experience to be able to look at your situation and go, okay, well, that lender, certainly that's not the lender we want to go to because they don't accept A, Y, and C, but this lender will do, B, J, and F. And that's where we work.
Yeah, absolutely. So your bank may not lend the number of times income that you need. They might not go up to the term of mortgage that you need. They might not accept certain incomes that you've got that you want to use, all those sorts of things. So you could save a huge amount of time essentially coming to you from the off, because you'll know, well, I'm not going to go to those banks.
Absolutely. I've done this for, X number of years, and I'll know straight away from talking to you and doing my fact find with you and getting to know you and building that relationship of knowing straight away, I know that lender, won't take into account, that that you're going to receive because it's voluntary maintenance or, it's not court ordered. I also know that, because you're self-employed and you've only been self-employed for a year, we can go to that lender because they'll take that into consideration. So yeah, I know all that because I'm doing this day in, day out. I know the industry. I know the lenders' niches, what they do and do change. And, things have changed with COVID, etc. And I keep up to date with that. I do my training every year, but obviously I'm doing it every day as well. And obviously I've been doing this for 15 years now. So, lenders come and visit me, lenders come and tell me what they do and don't do, because they want me to be able to put clients their way. And of course, that's where you'll save the time and potentially money, but also, the effort as well. We look after everything for you and try and take that stressful and hassle away of you getting all those potential knockbacks. And it can be disheartening going to different banks and building societies and being told, no, when actually I can say, or someone else similar to me can go, yes, 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 here are the actual different options.
Yeah, absolutely. And from a starting point, you will talk to people about how much they might be able to borrow as an absolute maximum and what it's going to cost and all that sort of thing before they found a house. People, you can do some preparatory work with people up front, can't you?
Absolutely. So when we do a first appointment, we ask for certain documents up front. Typically, an employed person, 3 months pay slips, 3 months bank statements. Self-employed person, it varies. It depends what type of setup they've got. It'll always include 3 months bank statements, okay? And because we get that information up front, I know that whatever I talk to them about or offer, we're going to get generally, because I've checked those documents up front. So what I do from those documents, I do, some calculations with different lenders, and we generally get you agreed in principle. Okay.
Yeah.
Now, that doesn't secure you a mortgage lender or an interest rate. But what it does is it's me as a financial advisor saying that I've looked at your situation and I've approached lenders, and I know that we can get you a mortgage of up to X amount based on your circumstances with that level of equity or deposit you're bringing. And you'll therefore be able to remortgage a property of X amount or buy a property of X amount going forward. But I know it's concrete to a degree because I've already checked those documents because you've brought them with you. We also sometimes ask for a copy of your credit report, and we can always help you get that. So we know that everything in the background's accounted for. And that's what agreement in principle is, to make sure that we are getting you that. And again, just following on, different lenders offer, different ways of calculating income. Where one lender can offer X amount, you can find some lenders can offer tens of thousands of pounds more because they calculate income in different ways. They accept different amounts of income, or they take, different deductions from income as well. And again, that's where a broker really helps.
Yeah. So what we don't want to say is, oh, as a ballpark, you might be able to get X number of times your income, because there could be lenders that can go more than that. You might be in a position where, depending on what liabilities you've got or where your income's from, that it could be less than that. So it's really important to speak to you before you go to anyone else. And the other thing to mention it is that estate agents often require that agreement in principle as well, don't they?
Absolutely. A lot of estate agents will now ask for that up front. And that's because, they want to know that the people that are viewing properties are serious people, but also people that have, done the first step, which is checking their finances are right. But also from your point of view as well, you don't want to be going viewing properties and potentially falling in love with a property to then find out that you can't get that property. And again, that's what they want for their clients. They want to know that if you're viewing that property and ultimately you do fall in love with it, you're going to be in a position to proceed. So yeah, a lot of estate agents do ask for them up front. And again, with the property market as it is currently, with properties potentially, going above and beyond their value, or not even making it to Rightmove, it's more important than ever to make sure that you're in the best position as a buyer to be able to make that offer straight away with confidence, to then obviously go on to hopefully purchase it, if that's the case.
Perfect. No, I really appreciate that. The other thing that I was just thinking then when we were talking about estate agents and so on is deposits. Is there a minimum amount of deposit percentage wise that lenders look for now?
5%. Okay.
5.
And the government stepped in just over a year ago and introduced the mortgage guarantee scheme, which basically meant they sort of backed up lenders and said, if you start lending 5% deposits, we'll back you up. But a lot of lenders now have moved away from the scheme and actually just offer 5% mortgages themselves now. And the interest rates aren't ridiculous either. So yeah, 5% as a minimum, and then sort of tiered down, but they're not ridiculously hard to get. They're relatively easy. They're at the higher end, but 5% is a rule. If you're looking at new build properties, there is still a help to buy scheme. It's slightly different to the current schemes that they have, i.e. there's a cap. So it's only up to properties of around 210,000 in the Northwest, But with that scheme, the government will also give you a deposit of up to 20% on top of any 5% deposit plus that you have. But that's only on new builds, and it's only currently up to properties of 210,000. There is a cap in the Northwest. So extra level of deposit available from the government there.
Okay, that's useful to know. And two other areas that I just wanted to touch on while we're talking about the basics. I'm quite often told by clients that there's no way they'll be able to get a mortgage because they're self-employed. Could you please smash that myth into smithereens for us?
Smashed. I mean, I'm self-employed. I've just moved 6 months ago, and I got a mortgage. No, of course,
well
you know. I mean, it's probably the hardest mortgage I've ever had to do, only because I'm looked at in a little more detail. But no, it's not hard to get a self-employed mortgage. That's not what I was implying. Of course, there are lenders that, you know, may be a little bit more cautious, but there's lots of lenders that, you know, that's their niche, that's their bread and butter. That's what they absolutely concentrate on, is, you know, they're like, we want to lend to self-employed. That's hard, you know, that's what we want. And again, as I said earlier, you know, in terms of what documents it bring, it really depends on the type of self-employment. You know, we've got limited companies, we've got sole traders, we've got partnerships. And again, they can be more complex in their own ways, each of those. We've got 1 year, you know, accounts. We've got people that might have gone from sole trader to limited. And there's loads of different lenders that, you know, again, have further niches on them. So no, it's not a no. It just is going to the right lender, and knowing what you're going to the lender with, and again, knowing how income's drawn from the business, etc. And again, that's really where you need a broker that knows what they're talking about, and understanding how, you know, self-employment works. Because again, if you walk into, say, a bank, or even, you know, brokers that aren't necessarily experienced, and you start talking about your limited company or your sole trader and showing them accounts, etc., and they don't understand that, you know, and not knowing, you know, what lender they can then go with, then yes, it might be, you might think it's hard to get a mortgage, but actually it's just because you're not going to the right place.
Excellent. And it's not, and heard you mention 1 year accounts there. So 3 years accounts is not essential before you look to buy if you're self-employed?
Not at all. And even it's not 3 years accounts generally for a self-employed. They're usually looking at 2. But no, there are lenders that will look at 1 year's accounts. And again, it's going to the right lender. And again, it's using the right broker, because if, you know, a broker has a relationship with a lender and stuff, and they can, you know, give the right picture of, you know, why the client has come to you with the 1 year's accounts, what they were doing previously, you know, and that's the broker having that relationship with their client, then, you know, it's that overall picture of, you know, working with your client and working with the lender. But yeah, no, it's certainly doable, and it's certainly not difficult. Lenders are eager to lend, and even with, you know, I hate to say interest rates going up, lenders are still eager to get money out there and lend money, and that's self-employed, employed, and, you know, people in between.
Excellent. Okay, one more that quite often comes up because might be tricky is about poor credit. So I suppose we could cover the whole spectrum. So if you've got from everything from a missed payment on a catalogue, for example, or all the way through to bankruptcy or an IVA, where do we stand with mortgages for people who've got issues in their credit history?
Okay, again, so there's a couple of things that lenders take into account. And again, you've got lenders that have got niches. So, you know, you might have your sort of high street bank that is very much computer says, okay? But then you've got lenders that are very sort of manually underwriting cases. So they'll look at cases and take a view, okay? And that potentially might be the sort of lender you want if, you know, there's a bit more adverse there. So when we say adverse, we mean bad credit, and there's a story to tell of why there's that bad credit, you know, whether that be, a breakdown in a relationship or whatever it was, if we can give them a good story and someone can take a view, then that might be the lender. If it's the odd missed payment, the computer type lender with maybe a better rate, they might still go through. Again, it's having that right broker that knows that. When you start getting into maybe more complex adverse bankruptcies and IVAs, it then sort of comes down to length of time, how historic they are. Your very recent bankruptcies and IVAs potentially we're going to struggle with, but again, there are lenders there that will do it. It's then going to be sort of rate driven. Again, if they're more historic, it's having that knowledge and experience of knowing what lenders to go to, because there are lenders that will do it. I always say everyone is mortgageable. Everyone is mortgageable. It's just when and how, and that's where I certainly love having that relationships with clients and coming into my own, because it's just finding out what the situation is, how it happened, when it happened, and then it's like, right, when can we say yes? So everyone is mortgageable. Everyone. Bankruptcies right up to a perfect clean credit. It's just when and how. So don't dismiss yourself ever.
Finding the right lender, isn't it?
Absolutely. And what I would always say with credit is open and honest with your broker, because you'll find that when declines and stuff start coming through, it's because people haven't been, and it's certainly not something to be embarrassed about. A broker's there to help you, and if you go to your broker and ask for help, then that's what we like to do. Well, I know that's what I like to do anyway. So.
Absolutely. And sooner or later, if you do try and hide any poor credit that you've got in your history, it'll come out in the credit scoring process anyway, won't it? And just cause delays that weren't necessary. If you know upfront, and you can help to put that with the right.
Exactly. If I know upfront, I can literally go, right, that's a no, because I know they won't accept that missed catalogue because it was in the last 6 months. But I know straight away they don't care. And that's and that's where, having that relationship with a client you can have with being, an independent broker, which you're going to struggle with more if you're talking to so-and-so in the bank, because, they're 9 to 5 and, they're restricted by sort of their office space. You can start to, really learn about the more emotional side of what they've gone through and go from there.
Sure, absolutely. Okay, so let's get stuck into some of the situations that our clients might find themselves in when they come out of their divorce. So one of them is I work with a lot of people who are perhaps not the money person in the relationship. So they might have not have been responsible for arranging mortgages in the past, or having anything to do with the mortgage, really. So let's talk about what happens when you come to the end of a fixed rate, for example, whatever deal you happen to be on. What should we be looking at? What should we be doing at that point?
So generally, when it comes to the end of your deal, you need to start looking about 3 months before, okay? Don't leave it till the last month, because there's a process that happens. Generally, as a rule of thumb, you'll probably move your mortgage to another mortgage lender. There's not really loyalty in the mortgage world, i.e. your current mortgage lender you're with probably won't offer you the best rates available on the market, which is why we say you start looking about 3 months before. And that's where, again, you'd probably approach a broker, because a broker is going to be looking at the whole of the market. That's what I am. And that's what you want to make sure you're talking to, a whole of market broker, because not every broker is whole of market. And they're going to look to try and make sure that they get you the cheapest product out there, next best to what yours is, if that's all you're doing, which is switching to the next best rate. Because there are other things you can do when you're coming to the end of the deal, borrowing more money, changing the term, etc. And you then apply for that mortgage at that time, supply all your documents at that time, and you get underwritten and approved at that time. And then there's a bit of a legal process that happens for that mortgage lender to then take over your current mortgage lender at the end of that time in 3 months.
Yeah.
But that legal process can take a little bit of time to happen because it's not a purchase, there's no initial rush. And that's why we say 3 months, because one, it gives you enough time to find a lender and get approved. And then it also gives enough time for that mortgage, that legal process, to happen until you get to the end of your current mortgage, which is usually the end of the month, in which case the solicitor acting or the conveyancer acting for your new mortgage lender will then pay off your current mortgage lender and your new mortgage will start. That's it in a nutshell.
Perfect. And you mentioned that there are some other things that you might want to do at the same time as you organise your product switch or move from one product to another, or from one lender to another if you're remortgaging to a new lender at that point when your deal comes to an end. So you mentioned maybe borrowing a bit more and also perhaps changing the term of the mortgage. Can you just run through a bit about why you might want to do those things and what the process is in those cases?
Of course. So when you do a remortgage, you're taking out a new mortgage, okay? At that point, you can therefore take out whatever you want. You're paying off your old mortgage. So whatever you agreed with your old mortgage, doesn't matter now, you're getting a new mortgage. Your only obligation is you have to pay off that old mortgage lender. So if mortgage lender A, if you owe 100,000, mortgage lender B, you have to take out at least 100,000, unless you've got money in the bank that you can cover the difference, to pay off mortgage lender A. So with mortgage lender B, your new mortgage lender, you might want to take out money to finish off a bathroom, take out a home, do an extension, pay off some debt that you might have accumulated, or pay off a divorce settlement or buy someone out of the property. You can also at that time as well change the term, because it's a new mortgage. If your current mortgage is over a 25-year term and you've now got 23 years left, but you're coming to the end of the deal and you're taking on a new mortgage, but say you're taking it on in your own right, or circumstances have changed and the current mortgage payment might be a little bit too much, or you might actually think you can afford to pay more, you can then stretch it back to maybe the 25 years again, or you could shorten it to 20 years if you want to start getting it paid off quicker. Basically, you're taking out a new mortgage, so you can change whatever you want about that to then obviously suit your circumstances at that time. So you could take out 110,000, 100,000 pays off the original mortgage A, you've got 10,000 left. You could use that to do what you need to do. And that 110,000 could be over 25 years, whereas your current mortgage is over 23.
Can you do that even if you stay with your existing lender?
Generally not. If you're going to stay with your existing lender, you're doing something called a product switch or a rate switch. And that's what it says on the tin. You're literally switching the rate, and that's it. So no. And that's when you definitely need to move to a different lender, because you're taking out a new mortgage. Whereas with your current lender, you're just doing a rate switch. So no.
And the product switch is not underwritten. So you're not being required to produce any new documentation, etc. You're just literally moving from one product to another. But if you remortgage, all documentation is required again.
Yes, and it's a good point to raise. You may find yourself in a situation that you're now at a point that your circumstances have changed so much since you took out the original mortgage that you might not now be in a position that you could take on a different mortgage. If you're with your current mortgage lender, that mortgage lender already has a mortgage with you. You don't ever need to reproduce your finances if you stay in that property with that mortgage lender. So you can always do a rate switch at the end of every product without having to reproduce anything, without ever having to be underwritten. So you're never going to find yourself in a position that you're going to jump onto a super high rate because you can't get a mortgage because you've all of a sudden your employment status have changed or something of a similar nature. You'll always be able to stay with your lender and get a different rate. So yes, it's a good point to raise.
Lenders always offer a rate switch. They're never going to make you stay on the standard variable rate.
Unfortunately, I have come across the odd lender that doesn't offer a rate switch. However, you will find that those type of lenders are very niche lenders. They're very few and far between, but your general high street lenders, you'll always be able to get a rate switch. But I have to add in that caveat because I have found the odd lender that doesn't offer a rate switch.
Just worth bearing in mind. Okay, so that's great. So we sorted out if we're remortgaging, if we want to do work to the house, if we want to just get on a better deal. What about moving house? So let's say I'm in the family home at the moment. We've come to the end. Perhaps there's a measure order. So the youngest child is 18 and we now need to sell and buy a new property, but never bought a house in my life before. Where do we start?
Me.
I had a feeling that might be the answer, Daniel.
Yeah, I mean, no, I'm not here to push any of my services on people, but someone certainly like me, someone independent, and I have people that come to me and don't necessarily go on to finish off an overall mortgage, but you need to get that right advice, and know exactly what all your options are, get everything on the table, all the cards. And most of my first, second and third meetings are clients will come to me with that, and then the first meeting will get it down to that, and then the second meeting will get it down to that. For those of you that are listening and not seeing what I'm doing with my hands, we might start off with 100 ideas, we get it down to 70 ideas, and then we get it down to maybe 10 ideas. And it's just about exploring those options, because there can be so many. And for looking on Google or talking to your friends down the pub, you're not necessarily going to get those right answers. So where do you start? You need to start with the right person and the right advice. And that's certainly going to be, an independent mortgage broker.
Yeah, absolutely. So we're starting off, we know we're going to sell the house. We start off going to see a mortgage broker and we get the agreement in principle that we talked about before. And that's before we even start thinking about looking at properties. But I guess one of the big questions that is something that I'm asked all the time: do we put our house on the market before we found somewhere, or do we go looking for our new house before? What order should these things be done in?
$1 million question. I believe you should put your property on the market as soon as you can, really, and start looking at the same time. You'll always get someone round to value the property, and I think that is generally going to happen as part of what you would suggest anyway, Tamsin. And you'll have a rough idea of what you're going to get, and then the valuer is going to confirm that, and then you're going to get the property on the market. But you'll also find, as well, as you start to go and look and look at your own properties that you want to make offers on, you want to be in a position that, one, your property really needs to be on the market before anyone's going to take any offer seriously. But B, or number two, you would hope that your property is going to sell quite quickly, so that when you do make that offer, potentially you could be making that offer when your property is sold subject to contract anyway, which puts you in an even better situation. But if you start making offers and your property is not even on the market, you're at a big high risk that you could lose that property, that if it is even accepted, because I don't believe a lot of agents, well, I know, wouldn't accept an offer anyway if your property wasn't on the market. And certainly if it did get accepted and then your property took, X amount to even get sold, or we then find out because it's not getting sold, you're not getting as much money as you might have thought. Therefore, the property you've made an offer on isn't actually now a viable option. And therefore, that's why I think you need to put the property on the market first, then start looking at the same time, do it that way.
Okay, that's good advice. I know a lot of people worry about, well, what happens if I put my house on the market, but then I don't find anywhere, or my house sells and I don't find anywhere that I want to move to. What happens then?
Well, that's down to your buyer. And ultimately, you're looking, and if it gets to a point that you feel it's going on too long, that's a conversation for you to have with your solicitor and the buyer solicitor. And is your buyer still prepared to wait, or does your buyer need to pull out? And ultimately, if your buyer is still prepared to wait, great, carry on looking. That's perfect situation. If your buyer can't wait and needs, well, then sorry, but they need to pull out. And then your property goes back on the market and you find another buyer, but you're not in any different a situation than you would be otherwise, because you're still looking for a property. But that's just a call that will be made if you don't find the property. And ultimately, it's not changing the situation accordingly. And that's why I would say you just still put it on the market anyway.
Yeah.
I think you'll find in a lot of cases, if someone really loves your property that much that they've made an offer on it, they will generally hang out for you unless there's a real reason they need to pull out. And that can depend on things like how big's the chain? Are they getting pressure from their buyer? If they're a first-time buyer, you'll generally find they'll hang in. Again, there's lots of reasons, and it's just a conversation you have if you get to that point.
That's really good advice on that, because I know a lot of people do worry about being forced out of their home, and nobody can force you out of your home. Having an offer on a property doesn't mean that you're going to get chucked out at some point. I know some people do make a decision to move out and perhaps to rent a property instead, but that's a personal decision, isn't it?
Exactly. It's your choice at the time. No one can force you out of your property. You decide, and you just have a conversation with your buyer. Look, this is a situation. Are you still prepared to wait? If not, then unfortunately, you're going to have to pull out, because I'm not moving out unless you decide you do want to move out. And again, it's your choice at the time, and it's a conversation at the time, but that time might not even come. So, that's where you are on that.
Perfect. That's brilliant. We're coming to the end of our time talking together today, Dan. And I wondered if you had 3 top tips for people who were looking for a new mortgage.
Be an independent whole of market broker. And like I say, you need to make sure that they are whole of market, because not everyone is. Okay. Get an agreement in principle before you start looking at properties. Okay. Because you want to make sure that you're looking at the right sort of remit. And my 3rd tip, enjoy it. It's this is the next chapter in your life, whatever that chapter might be. But just enjoy it. It can be stressful, but try and let someone else take that stress away from you. And if not, just take 10. Go back to it and just enjoy it, because it's the next chapter.
I love that. I love enjoy it, because you're getting the opportunity to nosy around other people's houses.
Absolutely.
Which has got to be a big favourite of mine. So, yes. Daniel, thank you so much for joining us today. If anybody listening wants to get hold of you because they need some help and they need some advice, where should they track you down?
You can visit my website, www.bellfinancialsolutions.co.uk. All my details are on there.
Perfect. And we will put Daniel's details in the show notes for today as well. So thank you for joining me. It's been a pleasure to speak to you as always. And I will see you soon.